We are at the point of that acceleration, which creates the supply-demand problem. And it's made worse. As we look forward, we have a debt problem because you can't keep adding to debt faster than you add to income without that problem. And that's a big risk. You have a change of 50, 25 basis points and so on. Let's just go back to the basics and the big picture. First of all, let's take the bond yield. The bond yield, roughly speaking, has got to be about what we determine the expected inflation rate will be over the period of time. Of course, there's a question about that. That number, it probably is settling into the vicinity of 3.5%. That's the right number. There has to be above that a real interest rate. In other words, for those who are holding debt assets, they have to receive a return above the inflation rate by something probably in the vicinity of 1.5%, 2%. So that is going to get you in the vicinity of 4.5%, 5% interest rates. And you're seeing the movement around that level. Then there's the big question of the supply demand for bonds. The government produces a certain amount of bonds that are in light in size that is equivalent of roughly the size of the deficit. That means they're going to have to sell a lot of bonds. And then we look at who are the buyers of those bonds and do they have an adequate appetite? And that's a big risk because many who own those bonds have had losses in that. That's not just banks, that is central banks, that is Japanese investors and so on. And so there's a supply-demand issue. You'll have these wiggles around there, but those are the fundamentals that will drive it. So we're seeing the need for the rise in real interest rates so that the creditor gets an adequate return at the same time as we have a supply-demand balance. So that's how it looks to me. What's happening in the economy is that a lot of money was sent out in the form of checks and the like, and went out to a lot of people. And so the household sector did well because the government sector did poorly. They got themselves in deeper debt intentionally so that the household sector and the business sector could be better off. And then there's the rise in interest rates. What happens from that is that savings of money gradually goes down. And also the debt maturities as they roll forward gradually go up and create a squeeze. So there's an emerging squeeze happening. However, because the unemployment rate is relatively low and because the compensation levels have been relatively high because of that set of circumstances, the household sector's income has been good. So you have a sector in the household sector, hence the economy as a whole, and I'll include the business sector in that, in which by and large the financial transfer of wealth from the government as it got in debt and gave it to the public sector, gave it to the private sector, that allowed that to happen. That is a formula for a gradually weakening economy, not a big break in the economy, a slowing of that economy. I think that's what we're seeing. And as a result of that, that's what you're seeing in the bond market as there's a bit of a easing within that range. As far as the question of where the rates are, most likely, I think the rate structure is going to be staying at its level, perhaps slightly less, but there's a range of uncertainty around that having to do with the supply-demand question. We're now at a period of time where the supply of bonds to be sold will start hitting the market. And now we have to see the demand issues of that, and that'll be around there. I think that probably, I would say somewhere in the vicinity of relatively flat. I don't think there's going to be any important change in the Fed policy other than maybe a slight easing as the economy slows down. I think the thing to realize is that the economy will likely weaken. In other words, its growth rate going to something close to zero, plus or minus, maybe 1%. And with that exerts a slight downward pressure on interest rates. At the same time, the supply issue becomes an important issue. I think we're talking about the short term as very distinct from the longer term. The short term we just talked about. The longer term is that we are at a point in which we are borrowing money to pay debt service. And there is a process by which when you keep having debt growth faster than income growth, then that means that you have debt service encroaching on your spending. It's the same for the government as it is for us. And as that happens, and you want to keep spending at the same level, there is the need to get more and more into debt. And the way that works, it accelerates. We are at the point of that acceleration, which creates the supply-demand problem. And it's made worse by the other issues that we're talking about. The internal political issue, the internal social conflict issue there is something that is affecting foreign demand for bonds. About 40% of our debt is sold to foreigners. And so there is a concern of the American politics, of the controlling of this debt crisis, and these types of things. So we come back to the same basic question. how strong are we going to be? When we talk about strong, what I mean is also economically strong. And economically strong means financially strong. That means it's just a basic thing. Financially strong means, do you earn more than you spend? Do you have a good income statement as a country? Do we have a good income statement? And do we have a good balance sheet? More assets than we have liabilities. The worse that gets, the more we are going to have that long-term problem. And it's just, you can see it in the numbers. It's just a matter of numbers. We are near that inflection point.
That was my biggest moment, okay? Building my little company. This is in 1981, 82. I had calculated that American banks had given a lot more money to lend, a lot more money to Latin American countries than those countries were going to pay back, and that they would have a debt crisis, and that this would send the economy tumbling. That was an extremely controversial point of view. Then it started to happen, and it happened, and Mexico defaulted in August 1982. I thought that there was going to be an economic collapse that was going to follow because there was a series of the other countries. It was just playing out as I had imagined, and that couldn't have been more wrong. That was the exact bottom in the stock market because central banks eased monetary policy, blah, blah, blah. And I couldn't have been more wrong. And I was very publicly wrong and all of that. And I lost money for me and I lost money for my clients. I only had a small company then. These were close people. I had to let them go. I was down to me as the last person. I was so broke I had to borrow $4,000 from my dad to help to pay for my family bills. Very painful. And at the same time, I would say it definitely was one of the best things that ever happened to me, maybe the best thing ever happened to me, because it changed my approach to decision making. I kept saying, okay, how do I know whether I'm right? How do I know I'm not wrong? It gave me that. And it didn't give up my audaciousness because I was in a position. What am I going to do? Am I going to go back, put on a tie, go to Wall Street and just do those things? No, I can't bring myself to do that. So I'm at a juncture. How do I deal with my risk and how do I deal with that? And it told me how to deal with my uncertainties. And that taught me, for example, a number of techniques. First, to find the smartest people I could find who disagreed with me and to have quality disagreement. I learned the art of thoughtful disagreement. I learned how to produce diversification. I learned how to do a number of things. That is what led me to create an idea meritocracy. In other words, person by person, I hired them and I wanted the smartest people who would be independent thinkers who would disagree with each other and me well, so that we could be independent thinkers to go off to produce those audacious dreams, because you have to be an independent thinker to do that, and to do that independently of the consensus, independently of each other, and then work ourselves through that, because who knows whether you're going to have the right answer. And by doing that, then that was the key to our success and the things that I want to pass along to people. And that is a magical way of achieving success. If you can create an idea meritocracy, it's so much better in terms of achieving success and also quality relationships with people. But that's what that experience gave me.
Found this video insightful? Hit subscribe, turn the bell on, smash that thumbs up, and dive into the links in the description below. Join our vibrant community to ensure you never miss a video. Your generous support fuels our passion. Thank you for watching. We love you.